Hey, everybody, welcome to the Get It Done podcast. I'm your host, Jimi Ryan, and today we have a close personal friend of mine. His name is Phil Treadwell. He is the National Director of Sales and Innovation and Strategy at Thrive Mortgage, and he is the host of the Mortgage Marketing Expert podcast. Phil, welcome to the Get It Done podcast.
Jimmy, I'm excited to be here. A big fan of yours and what you're doing, and so humbled to be here. Excited to have a cool conversation.
Let's get right into it because you're a person that's actually inspired me in a lot of ways to start the Get It Done podcast. And there's a lot of questions that I really want to ask you. And but before I do, is there anything that I missed in my my brief edification of Phil?
No, man, you did well. I appreciate the words. Man, I do a lot of stuff. Anything that adds value to people that I can have some fun with and learn stuff myself, man, I'm all about. I think that there's an incredible amount of awesome people on this rock that we live on, and there's a lot of cool things to learn and do and experience. And my plan is to meet as many people and do as much stuff as I can while I'm still here, and the rest will take care of itself.
That's beautiful. Well, we're going to get right into it. So the Get It Done podcast is all about the come up story. And I use Elon Musk as an example. He has a great story from, 1 million to a billion and, being the richest man in the world. But I really want to hear the 0 to a million story, the come up story. And a great place to start with that, Phil, is where were you born?
I was born in a little town in Southwest Missouri called Neosho, and most people know where Joplin is because of the huge tornado that went through there several years ago. I lived about 10 or 15 minutes south of that. My dad still is a builder. He doesn't do quite as much anymore, but he'll never fully retire. So he's a builder, and my mom was a teacher in a town of about 9,000 people. So I say that I'm a mix of entrepreneurship meets academia. And I had an older brother who's 6 years older than I am. And so I think that's always made me a little bit of an old soul because, if you want to hang out with your brother who's 14 and you're 8, you can't act 8. And that continues on and, 12 and 18 all the way up. So always was, I was youngest of the two kids. And so, yeah, man, lived out in the country, couldn't even get a pizza delivered to us.
That's awesome. What was it like growing up in Southwest Missouri? I mean, is it just like typical, you have a little bit of a Southern accent kind of thing going on. Is it like just, I don't know, good old homegrown Southern type of thing? Or
yeah, man, it was your stereotypical childhood. We had 4 seasons, in Missouri. When it's hot, it's hot. When it's cold, it's cold. Had family that lived pretty nearby. Lived down a dirt road. So, we rode our bikes, went to school, played sports. I mean, it was your typical childhood. Nothing crazy in the town. It was, for all intents and purposes, pretty boring, if you will. And, but, my brother and I think we're big dreamers from the very beginning. We both ended up growing up and moving other places. My brother lived in Colorado for about 10 years. He lives down in Florida now. We both love to travel. And so it's always interesting coming from what I would call a sleepy little town in Southwest Missouri to kind of the imagination both of us have and things we did. And that may be why it may be just boring. We had to come up with our own stuff to do. And that, we weren't necessarily overstimulated. So we had to come up with stuff and maybe that's why.
I mean, it definitely seems boring. And I mean, I'll definitely, from a podcasting perspective, move on. But was there anything you remember, big moment in childhood that really changed your life in those younger years?
Nothing pivotal. I will say that whenever you are in a boring little town like that, you find things to do. And for me, that was always starting little businesses. I was always trying to come up with odd jobs. I was always trying to, start classified ad mail businesses. I always had little stuff I wanted to do. Network marketing and multi-level marketing type businesses are rampant in that part of the country. And so I dabbled in that in my younger years.
What'd you do?
And
what'd you do in that?
So I did Quickstar, which was essentially the internet Amway for a while. I did that right out of high school for a few years. Actually made some money and met some pretty cool people. I didn't have a great experience with a few things. I think, I never really talk negatively of those types of businesses because some of them sell really high quality products. Some of them are really good business models and some of them are complete scams. So,
Right.
buyer beware, of course. But I will say the one thing that I learned coming out of those types of things was you get told no a lot. And I remember one of my mentors at the time in that business said, when someone says no, you have to look at it like you're just offering them ketchup. If you're sitting at a dining room table and someone hands, hey, do you want ketchup? And they're like, no, no, thank you. They're not saying, oh my gosh, you're a terrible person. I hate you. What's your judgment in ketchup? They're like, no, they don't want the ketchup. And so having to talk to a lot of people, because most people are not interested in getting in your business or buying your products, I got thick skin at a young age, at 19 years old, 20 years old, being involved in a business like that, I think helped me develop some sales skills. And the other thing is it was my first exposure to authors like John Maxwell and, some of the business leaders and personal development leaders that I look up to and learn from and get mentored by even to this day.
Absolutely. I mean, I can only imagine just the adversity that you were, put up against, especially at 19, 20 years old, asking people to join your, join your downline. I got to ask you, did your dad being a builder, did that influence, a lot of the direction in your life? Or, I mean, because you're in mortgage, builders are a piece of that. What role do you think that played?
A direct role and then no role at all. And here's how I'll answer that. So my parents actually divorced when I was 15, turning 16. So my last couple years in childhood or of childhood at home in high school, I was kind of out on my own. They were kind of busy fighting with each other, and I'm trying to get through my high school years. So again, already being a little bit of an old soul, and then parents, going through divorce at that time, I kind of grew up pretty quickly. It's one of the reasons that I started, working quickly, got married young, that unfortunately led, to divorce down the road. So, had a lot of challenges, but from him being a builder specifically, I didn't have a really close relationship with my dad early on. Not that it was a bad relationship, but he was always working. Right. And if you think about me growing up in the 80s, the 70s and 80s, wasn't that great for builders. Right. He was doing everything he could. So a lot of the work ethic that I have today, I learned from him. He was always working. He didn't come to every baseball game. He didn't come to every basketball game because he was providing for his family. He was setting that example. So when I got out of high school, I went to college for a few years and was a store manager for Blockbuster Video, which was the absolute funnest job I've ever had in my life. And ended up as I was trying to figure out what I wanted to do with my life, whether it was go back to school or whatnot. I went back to working for my dad because I'd always worked for him in the summers growing up. And I went back to work for him. And I really thought that I was going to take over his business. That was my plan. I was running a little finishing crew. I was doing, trim and crown molding and doors and windows and things like that. And I said, hey, I want to take over your business. That's what I want to do. And he said, nothing would make me prouder than to be able to hand this off to you. But, you don't remember what it was like when it was really hard. You've seen it, through the 90s and 2000s when it's been a lot easier. And he said, I want you to think long and hard before you decide this is what you want to do for the next 30 or 40 years. And so he said, I at least want you to see with your education and talent and abilities, see what else is out there. And I really thought I was going to answer, a couple of ads, check a couple of jobs out, and then come back and take over his company. And so I answered a newspaper ad for someone that was looking for sales and management experience, which I had both. And it turned out to be a mortgage company. And that was 17 years ago.
Wow. That's crazy. So, okay. From literally store manager at Blockbuster to mortgage, I have to ask you said that the store manager at Blockbuster was the most fun job you've ever had. Why do you say that?
Okay, so first of all of the movies and DVDs, like because it was still VHS at the time. I'm dating myself here. VHS. I had this is my claim to fame. I created the first DVD new release wall in the state of Arkansas, in Fayetteville, where University of Arkansas is at. We created a DVD new release wall. Because when you walk into a video store and that the whole wall, that's where everybody's going. No one's looking at the stuff in the middle. You want to go to the new release stuff,
right?
So obviously we got to take all the movies home and watch them before they came out because that was part of the job. How is this movie? So I got all the free movies that I wanted. but there was a little thing called a free movie card where you get to get free movies and you pass out those little cards. That was gold, especially in a college town. So there was a theater across the street. I could trade 5 free rental cards for 5 sets of movie passes in the theater. I could trade a couple free rental cards for a pizza. I could trade free rental cards for ice cream. Like I had the town wired where they would, and a lot of these people were shopping in our competition. I don't know if around there they had Hastings. Hastings was a big company that we would compete against for movies. And so this was our business development. We were supposed to hand those out, and we had so many that we could give out a month, but man, we'd trade that bad boy out. And the only reason I feel like I honestly quit was because every Friday and Saturday night and every holiday, as the store manager, I had to be in that store. And so, man, that wasn't a way. I was, young. I just got married. We were going to have kids. I didn't want to work every Friday and Saturday night and every holiday. So I moved on to some corporate sales stuff and was again doing network marketing at the time. And yeah, man, did some cool stuff, had some cool experiences, met a lot of cool people, but I still have a little nostalgia for the old Blockbuster Video.
That's really awesome. So take us to mortgage. So everybody falls into it. There's nobody that just says, hey, like for instance, like you're going to take over your dad's company. That's 100% your intention. And for me, I fell into it too. Everybody does. Talk about just starting out. Like, what was it like? What were you given? What were the tools you were given? And what was your first days, first months like?
I was lucky. I will say that in 2003, 2004, whenever I got in the mortgage business, that was really the first of the wave and spike of what a lot of people see as the subprime wave. And to give context, I answered a newspaper ad, went in for a half-hour interview that ended up lasting for about 3.5 hours. And I'll never forget, the owner of the company that I went to work for at the time said, if you decide to get in this business, you're going to look back on this conversation one day and cuss me, because once you get in the mortgage business, it's really tough to get out of it. And I've looked back on that time and sometimes been very thankful, and sometimes like, man, he was right. But I got in and was the mortgage business. I knew that I had a background with building, so I kind of understood conceptually real estate. But I literally went into it thinking, even if I fail at this is something I don't know anything about, and you can't take the knowledge away from me once I learn it. That's really what I went into it thinking. My mom was not happy at the time because she said, interest rates are like 6.5 or 7%. They're so low. What are you going to do when rates go back up? Because you're coming off of rates that had been in double digits for years. And so I got into it. My first mentor and manager, his name was Tracy Mitchell. He's in financial services now, but he did 4 days of classroom style training, and he taught me the mortgage business. He started handing me the 1003 and said, read it. It was 4 legal pages at the time. He said, read it. So I thought I was going to be really, really good and take 10 minutes and really read it. And I said, okay, I've read it. He goes, no. Read it, study it. Everything you need to know about originating a mortgage starts on that application. And so then he went through the loan programs. He really taught me conventional FHA, VA, USDA, rural development loans were big in that part of the country. And then he said, if you can't do one of these programs and approve it in DU, which DU was in his infancy at the time. And he said, if you can't approve it through DU or us manually underwrite the FHA loan, then you need to send it to the non-conforming department. That guy will try to get it done. And if so, you'll split the commission and we'll try to do it. And my niche was manual underwrite FHA stuff, because everybody was doing these 80-20 subprime loans with 8.5 on a first and 11 on a second to get 100% loan. And I would swoop in and do 7% on a manual FHA with down payment assistance, and I would just crush it. Now, my first year, I did about 56 to 60 units. 2 of them were over $100,000. Everything was around the $80,000, $90,000 range. And I would say all but maybe 10 were FHA loans. Did a couple of conventionals and a couple of VAs. And I didn't know that I could do a refi. I really didn't. I tell the story. I was about 1.5 years in, and a buddy said, hey man, rates went from like 7 to like under 6.5. It's like close to 6.25. Man, can you refi my house? And I'm like, I don't know. And so I called my boss and I said, hey, my buddy's calling. Can I refi his house? And he's laughing at me on the other end of the phone. I'm like, dude, you handed me a box of flyers and said, go talk to realtors and tell them to send you business. That's what I've been doing. Right. And that was it. I did 4 days of classroom style training. On the 5th day, I followed him around to talk to his realtor referral partners. And that following Monday, he had one of those, Xerox boxes full of like, where normally you have your paper reams. He'd made a bunch of black and white copies of flyers with my information on those big black binder clips, hand it to me and said, go talk to realtors and tell them to send you business. And again, I was a kid, I was probably 21, 22 at the time. And I had a goatee. He said, keep the hair on your face and wear a tie. It'll make you older so that people take you seriously. And I thought it was interesting because he didn't say, in case people don't take you seriously. He literally said, so that people take you seriously. And the implication was that go forth and conquer, do what you can do, but this is going to be an uphill battle. And it was really tough those first couple of years.
I mean, good luck, go for it. Who was this trainer guy, by the way?
He was my manager. He was the GM of the company at the time. He'd originated for about 10 years. He was, super successful, very, very, very nice guy. Again, his name's Tracy Mitchell. He's in financial services, and he was really my first mentor in the mortgage business.
That's pretty cool though, because as you know, training in the industry is very lacking. And for him to actually sit down and give you a 4-day training when I'm sure he had 1,000 other things to do is actually quite unique. I mean,
it is. I was very lucky.
Yeah, I was given a phone and leads and just go call people. And literally I had somebody to apply and I didn't even know what to do next. Like that's how much I knew. But that's great. And 80 to 90K FHA manual underwrites, that's just nuts.
Dude, I did all day long. And what I would do, because we were a full Eagle correspondent shop, so we could do in-house underwriting for government stuff. And a lot of people weren't even doing those loans at the time. And so there's 2 things I would do. Our dog and pony show, since DU was brand new, they gave us all a laptop. And if you remember back in the day, they would have those modem cards that you plugged in that had the little antenna. It was essentially dial-up speed for like $100 a month. Well, we would get those and they would pay for them for us. And we would have a file that was already like queued up and ready to approve. And so we'd take it from Calyx Point and we would click, desktop underwriter, and it would go into DU and we would click a couple buttons. And over the course of 2 minutes, it would pop back, approve eligible. And we'd be like, that's how fast we can approve the loans. And that was our dog and pony show, is that we had automated underwriting and we could give them approval. And as long as we meet these conditions on here, we're good to go. And the people that wouldn't give me the time of day, I said, okay, do you have existing lenders that you work with? I'm like, yes, I work with 3. I was like, I'd like to be number 4. If they can't do something, just give me a call. You don't have anything to lose. And the way I looked at it is that if I couldn't do it, so what? Their 3 lenders couldn't do it either. But I just needed one that I could do, and I was in. And I grinded it out. I would MapQuest. Yes, that's how far back when we weren't even TomTom or Garmin, or if they did have it.
You MapQuest and print it out.
Yeah, and MapQuest and print it out, because even if there was the TomTom or Garmin, like I couldn't afford one, let's be honest. So I was MapQuesting from office to office so that I could get to every real estate office in the morning, go home and have lunch, and then I would go to all the same real estate offices again. And fortunately, those gatekeepers that they have at the real estate offices that you have to get past, fortunately, they had pity on me. I was a kid. They kind of thought I was a little bit of a joke to begin with. And I remember one of them, after a week or 2 of doing this, she's like, aren't you afraid that if you keep coming morning and afternoon every day, that they're not going to want to work with you because they're not going to think you're doing any business? I looked her straight in the eye and I said, if every realtor's here morning and afternoon, they're not doing any business either. And just kept on handing out my flyers. And she just kind of chuckled. And my first deal was, I was walking through an office and I had an old busted, broken down Jeep Grand Cherokee with a Arkansas Razorback sticker on the back of it. Go Hogs. And she stops me in the middle of the office. She said, hey, is that your Jeep Grand Cherokee out there? And I said, yes, ma'am. And I'm thinking it's smoking in the parking lot, or I parked the wrong place or something. And she's like, what are you doing here? And I'm like, I'm Phil Treadwell with Heartland Funding Corporation. And went through my whole speech. She goes, oh, okay. You're a lender. And I said, yeah. And she said, okay, I got a deal for you. Come here. Well, come to find out, her husband was an Arkansas Razorback fan. She didn't care who I was. It was about the fact that I had something relatable to. Like, we're in Missouri at the time, and her husband was a Razorback fan. And I tell that story a lot when I talk about marketing, because here's the thing, guys, we all talk about features and what we can do as lenders. And instead of being human and becoming relatable and being relevant to one another and finding commonalities, that's really what this is about. People do business with people they like. Well, if you don't ever talk about anything other than your business, because let's be honest, no one really likes talking about business. If you don't ever do that, you don't have an opportunity for the Vickies of the world, which was this lady's name, to stop you and say, hey, I got a deal for you.
Well, all of a sudden, first of all, Vicky doesn't even care that you do, manual underwrite FHA loans.
Nope.
And that you're a full Eagle correspondent lender. She doesn't know what that means. She doesn't care. She cares that you're like the Razorback fan. That's insane. Was that a pivotal moment for you? Like, the epiphanies, just like light bulbs are going off, like, hey, I just got to be relatable. So what changed? I guess where did you go from there?
So, I mean, again, the guy, the irony of it was, she literally gave me a guy's name and address. It wasn't a phone number. And I'll never forget his name. His name's Tony Hatfield. He built race car engines. And she said, go to his shop and take an application. And she goes, oh, by the way, do you do bridge loans? And I didn't know what a bridge loan was, but my boss had told me we do everything. So if someone says, do you do X, you just say yes. So I said, yes, of course we do. She goes like, okay, he's going to need a bridge loan. Because, of course, now we know he hadn't sold his property yet, but realtors love it when they don't have to sell the property and they can go ahead and sell him another one because they still have the listing. And so it's like a 20-minute drive out there. My boss isn't answering. I'm blowing up his phone. I'm just calling once right after the other. I didn't have a lot of tact at that point in time. And I literally left him a message like, man, you told me to say yes, and I'm supposed to do a bridge loan. I don't even know what a bridge loan is. You need to call me back, just like freaking out because this is my first deal. Like, I don't know. And so, but it was a pivotal point for me for two reasons. One, I realized I'm sitting here trying to talk about, my products and how good we are and how different we are. I didn't know that lenders were already talking to realtors. I remember when I first got started, I said, listen, our differentiator is we don't wait for customers to come to us like banks do. We go and talk to realtors, where the business says, well, hell, everybody was already doing that. I just didn't know. And so I think I was naive enough just to go do the work and not ask any questions. And I think now we're lazy as an industry. And I mean that sincerely.
I agree.
A lot of times we just don't want to do the work.
You're absolutely right. I think you were young and naive to a good, positive, a good positive thing. Like here, I would never start my first mortgage company today. Like, there's not one chance you could you could get me to do the things that I did there. But you kind of had to do them because it's the story we're telling today. And had I not had it that rough, and I would argue for you too, had you not had it that bad where you're showing up twice a day, literally being made fun of by a receptionist, I don't think that you'd appreciate it nearly as much. And truthfully, I mean, no one wants to work with somebody that didn't struggle through it. I'm sorry, but if all it was actually really handed to you, which it never really is, it's never really like, there's no, magic button, but you wouldn't want to be worked with anyway. You wouldn't relate with these people.
I'll tell you another short story that happened right around that time. That first year and a half were pivotal for me. At that time, so after I'd been there a couple of weeks, I'm like, you know what? I don't even know what day we get paid. I didn't know going into it that it was an all commission position.
Oh my
I
God,
assumed
you didn't know that?
Well, I mean, I knew that we got commissions, but I didn't know that I didn't get like another regular check too. Right. I mean, I understood that we got commission and how that worked, but I still thought I got something every couple of weeks for, kicking my head in.
Yeah.
So I say all that to say they had me set up on a $750 draw every 2 weeks. So about $1,500 a month take home, which, as we all know, is not a lot of money even then.
And you're married and you're just starting a family.
I'm married with a baby and another one on the way. And we're living in a little apartment, and that's the story here. I had a truck. We lived in an apartment complex. I had a truck that I think that I was borrowing from my stepdad at the time, ironically, because he was a builder as well, or a roofer. And it was one of those trucks that had 2 gas tanks in it, right? Refill both of them. And gas was extremely high then. So that was a big part of our budget because I needed to get all these real estate offices. That's how I was making money. And someone in our apartment complex siphoned one of the tanks out. Well, that wrecked our whole 2 weeks because I needed that gas to do what we needed to do. So I remember my ex-wife at the time, we didn't have, I think there wasn't enough diapers either for one of the kids or whatnot. So she's trying to call around and figure out, how do we handle this diaper situation? And so I go to the bank, and I knew that I didn't have enough to pull out a $10 bill out of the ATM. Let's be honest. So I pulled up to the window and I said, "How much can I take out and still leave the account open?" And she hands, they don't tell you, they hand you a little piece of paper out the window. And it was like $1.42 or something. I'm like, okay, I want that. I used that to put like a portion of a gallon of gas into my truck to drive like 10 or 12 miles to my mom and stepdad's house. I knew that they were out of town, but they had a change jug. And I took $10 in quarters out of there to put enough gas to drive to our corporate office, which was about a half hour, 45 minutes away, to pick up another draw check. Because I'm still in the hole at this time. I haven't done enough commissions to get completely out. I started in the summer, and it wasn't until December, because I was consistently closing loans, so they're consistently giving me draws, but I haven't dug my way completely out yet. And I'll never forget, it was probably around June that I started. And in December, right before Christmas, they handed me a check, and it wasn't time for my draw check yet. And they're like, "No, that's payroll." They said, "You're out of the hole, and this is what's left over." And after taxes, it was like $1,050. And you got to understand, my whole life changed right there, because I'd not only made it, but I saw, holy crap, now it's all upside, because I knew what I was making per deal. I was making good money per deal, but I'm having to get out of hawk. And I share that story with people because I have folks that I talk to or that I see that are scared to get on the phone because of what people may think of them, or they'll talk to guys like you and I that have had a little success in this industry and want to call us lucky or whatever. And I'm okay with that. It doesn't offend me, but I want people to know there's a price to be paid, and everybody's price is different. Mine's going to be different than someone else's. Other people have to overcome way worse things than I did, but you have to be willing to do the work. I don't care if you're Elon Musk. I don't care if you're a loan officer in a little company nobody's heard of. You have to do consistent and persistent effort over time. You've got to do the work, or it doesn't matter.
That's just fire, brother. And to pivot off of that, I really want to get into podcasting with you, but I feel like there's a story between when you just started and like literally you just got out of the hole.
I'll make it a quick story. How about that?
Yeah,
so
because here it's 17 years. That's a lot. I mean, we have financial collapse. We have all sorts of things happening. Bring us up to the podcast.
So I did that for a couple of years for that company. Ended up going to work a couple of years later because my boss and mentor had moved on, and so I wasn't quite as sticky with that company. Went to a broker company that had a net branch model. So I did a net branch with them, and was a branch manager, and I brought in some people and hired a couple LOs. Way too young to be a branch manager, had no idea what I was doing, but I have a tendency for ready, fire, aim, or jump in the deep end of the pool. And sometimes it works out, sometimes it doesn't. From there, went to a different company that was just kind of a corporate model, if you will, and decided, no, I want to open up my own broker shop. So I ended up opening up my own company in about 2006. In retrospect, that was the beginning of the financial collapse. That wasn't the greatest time to become self-employed in the financial industry. Did pretty well, had a couple loan officers, was still continuing to grow my production. At that point in time, 6, 7, and 8, I'm getting close to my 5 years in. So I was really excited about being able to say, hey, I've been doing this for 5 years. I felt like there was like a milestone there. And had been approached several times by Wells Fargo to come work for them, and was not interested because, I've got my own deal. Well, at the time, one of every 3 loans in the country was going through Wells Fargo, whether it was retail, wholesale, or correspondent. And part of their growth model was just acquisition. So I tell people that I sold my company, but really they hired me by paying me enough money to close down my company, right? They paid off the debt. They just gave me a nice little chunk of money and a sign-on bonus and enough to go to work for them. So in early 2009, I started with, or I guess it was late 2008, worked for Wells Fargo as a retail loan officer, was a top producer in about a 6-state region, liked their model at that time. Rates went from like 6 to 4.5, but didn't love the big bank model. I didn't like the big retail,
I have to imagine.
thing.
I mean, you had to have. I know here. I know what you do today. I have to imagine you must have just like kicked your head over and over and over and over and over again working at Wells Fargo. I mean,
yeah, it was a unique experience because I'd never sold rate and I'd never sold a name. I was always a higher rate in the market and no one knew who I was or my company was. So all of a sudden I had a little bit of name recognition and I had a little sharper price because I was doing a lot of business. What happened though is after about a year and a half, our fulfillment site sent our service level agreement saying, regardless of loan type or program type, after we receive it in fulfillment, because we were still overnighting paper files at that time in 2009, overnight FedEx. When we receive it, you can't close it for 30 days. Well, there's a front end process there, which means every contract's going to have to be at least 45, if not 60 days. And that wasn't sustainable. So I went back to kind of small, mid-sized correspondent, independent mortgage banker world. And have pretty much been there ever since. I worked for a small company for a couple of years, went to work as a regional manager for the next one for about 6 years. They were based here in Dallas, which is how I ended up down here. And then the last couple of years have been more of a national position. Right now, my position's around sales, innovation, strategy. So I work with our regional leaders in marketing and help with our recruiting and talent attraction teams. Where the podcast comes into this is that company that I worked at for about 6 years as a regional. If I got out of Southwest Missouri, Northwest Arkansas, if I got out of that area, my recruiting results went way down because no one really knew who I was and didn't know who my company was. And so I realized, hey, people Google people. Like anytime anyone reached out, I Googled them. So I'm like, okay, well, maybe I should do some more stuff online, content marketing wise. That very quickly moved into social media. And because I came across this crazy guy that was screaming on social media named Gary Vaynerchuk, and just fell in love with what he was saying, started doing some social media stuff and decided to start an Instagram page called Mortgage Marketing Expert for no other reason than I owned the website domain. I wasn't trying to call myself the mortgage marketing expert. I knew I was going to bring people on to talk about this stuff. So I started this Instagram page doing a mortgage marketing tip of the day. And 1,000 people followed it in the first 30 days. After 90 days, started running out of stuff to say. So I started bringing people onto a podcast, not thinking people would listen to the podcast, but knowing if I interview this expert, I'm going to be able to take some quotes and feed this Instagram page. And the thing absolutely blew up. So my initial reason for doing it was to kind of create a platform to have some credibility. So as I was trying to network or recruit with people within the industry, they're like, hey, he knows this person, or he has some information, like, he can help me build my business. And that was really the crux of how it started. And fortunately, I had the opportunity to interview some really, really cool people right out of the gates. And the whole thing kind of exploded. And so instead of using the podcast to feed this Instagram page, the social media was just supporting the podcast. And I've just been super lucky to have some really, really talented people come on and share, and had some opportunities to speak. And man, the whole thing's just kind of been out of control the last few years.
Yeah, and as a regular listener to your podcast, you provide so much value, and I always laugh a lot of times when you talk about your first interview with Barry Habib and how basically you just read questions, didn't engage at all, and just said fantastic. How do you think that? I mean, there's some people out there that are just so afraid of this and they just don't want to do it. It's just like, I swear I talked to you for 5 minutes and I'm like, I'm starting a podcast. And that was episode 77, actually. Gosh, I forget who the heck it is. Basically, you quote I forget who you quote, but you basically said the average podcast listener makes $250,000 a year. The average podcast listener listens for 30 minutes. And basically, you just list all these stats out. And I'm thinking, wow, why don't I do this? So what really made you just blow it the heck up and I guess take it to the level that you're currently at and be an actual great interviewer? I mean, what made you just keep on pushing through and really just make it a beautiful thing.
Well, I appreciate the kind words there. I looked it up. Episode 77 is Bradley Flowers. Bradley's a really, really good dude in the insurance space. And I met him because we both had the opportunity to do a podcast recording with Gary Vee. And so there's kind of a group of podcasts. If you've gotten to do that, we all kind of network with one another all across a lot of different industries. But he's a wealth of knowledge, and insurance and mortgage are closely related. So we talk about that stuff. But to answer your question, I wasn't a natural interviewer, but I like people and I like to talk to people. Going way back, my report cards, I always got straight A's, but at the bottom, it was always talks a lot. Right. So that was, we all talk about how do we find our natural gifts, or how do we find things that we're naturally talented at and then build skills around them. Mine was, I liked to talk to people, and I typically could relate to almost anyone. That was part of that network marketing thing. You had to very quickly find common ground, that relevance, right? So that was my natural ability, was talking and relating to people. So then how do I develop the skill of unfolding a conversation? And I'm not perfect at it by any stretch of the imagination, but have developed some skill around it. But initially, again, the podcast was, no one was really doing a mortgage podcast. Lykken on Lending, David Lykken is, OG in podcasting. Jeff Simfer had mortgage marketing radio out there. And I just wanted to kind of make my own mark, do a show that I really wanted to listen to the way I wanted to do it. I didn't expect people to listen, but I knew two things. One, the quotes can feed this damn Instagram page. And these were people that charged thousands of dollars a month for coaching or for support for their time. And I was getting for 30 or 45 minutes for free to ask any question that I wanted. Like, I was going to learn, if nothing else. And right. when stuff started happening, I still didn't consider myself a podcaster. And then I just realized, hey, if I'm going to do this, let's do it well. Let's start creating more skill around it. Let's start educating ourselves. And what I found out was that of the content types, when you talk about marketing, there's written, there's video, and then there's audio. That's really it. The way we communicate in marketing is one of those three ways. And so I liked audio. I tell people I have a radio face, meaning I don't love to do video as much. I'll do it, and I push myself to try to stretch and grow. But like you and I are having a conversation right now, that's what I like to do. I like to do one-on-ones. I like to have conversations with people. I just push record, and I try to take the conversation in a sequential flow that makes sense. Everything else I hired out or learned on YouTube or whatever else. But the stats that you're talking about, yes, in mortgage and real estate, the demographics of the people we're trying to reach, those are podcast listeners. The amount of time that you engage with someone on podcast versus video, man, that's for me why that medium is there. And if you look between Amazon Alexa, between this new social media app Clubhouse, between the way they're integrating these things into cars, we're going audio voice. We're going there. And so I love that you have a podcast. I don't think everyone has to have a podcast, but I think everyone needs to participate in audio and voice, because that's where we're going.
You mentioned that you, when you started, you began to build skills around, your interviewing skills. How'd you build it? What did you do to learn?
Great question. I listened to myself, right? We don't listen to a lot of things that we do. We think we know what we're saying and how we're saying it, but we don't quite have the self-awareness. And I noticed in a podcast recording I did a couple of days ago, I've been very good, thanks to our friend Renee Rodriguez, to take the word out of my vocabulary, still say it, and it's still natural to a certain degree, but it doesn't happen over and over and over. Where I started substituting was right. Like, I would make a statement and say right, and then go to the next one. And during the interview, I actually stopped because we were having a similar conversation. And I said, I'm just going to call myself out here. This is what I'm doing. And I'm recognizing that I'm doing it, because as a podcaster, I've gotten good at, as we're having the conversation, trying to listen to what I'm saying and not just getting caught up in trying to push the conversation. So as mortgage real estate professionals, I don't care any type of business where you're dealing with people, don't break privacy rules, but record your conversations. If you're on a separate phone, maybe record your part of the conversation and listen back to how you said things. It's a unique experience hearing yourself in a podcast. I'm like, I really sound like that? Did I say that? That was stupid.
It's
And that's how you do it.
it's honestly, for me, it's the hardest because you're your own worst critic. You
Yes.
oh man, I said that so stupid. I said that so stupid. And pretty much everybody's just gonna be like, it's not that big of a deal. But that's really interesting that that you just listen to yourself and give yourself the self critique. Um, Tell us about Industry Syndicate, the podcast network that you're working on.
So
What is
yeah, it's essentially a collaborative. There was a few of us. Dustin Brome was my partner and my co-founder, and there was a couple other guys that were with us in the beginning. And what happened was we met each other at industry conferences, and we were all in the same mindset of where we saw the industry going, the type of more relevant modern content we were putting out, and we all got the same question: where do we find other podcasts like yours? Because again, there wasn't a lot of industry podcasts at the time. And even as there started becoming more, when you go to a podcast, whether it's Spotify or Apple or wherever, typically mortgage and real estate podcasts aren't the ones in the banner that you can, go
right?
look at first. So we decided to start a podcast network, specifically, a group and a collaborative of podcast for mortgage and real estate professionals to go find what we consider some of the most modern and relevant podcasts in the mortgage and real estate space. We have an appraisal podcast on there. We've got some in real estate sales, some that are more marketing focused, several in the mortgage space. Todd Duncan's podcast, Jen Duplessis, Jeff Zimfer, like I was mentioning, myself, Steve Kiles has Loan Officer Leadership podcast. We've got several in the space, and it's just a collaborative of, we all identify ourselves as part of the network. It drives traffic to the network where people can find other shows or your show can be discovered. And it was just kind of a cool idea. And we're working on growing it and taking it in different directions, and really trying to be the resource for audio content in mortgage and real estate. And got a lot of work to do, but I tend to monetize my hobbies. And so I turned that hobby of podcasting, as I helped at my business, we turned it into a podcast network. And so it's a cool little project.
That's excellent. You mentioned growth. What are your growth strategies for your podcast?
Well, it ties back to that, getting better at podcasting. So listening to myself, I read a lot of books, on communication. Rene Rodriguez is a good mutual friend of both of ours, going to things like Amplify to learn how to communicate and build that brand story. Growth for me is a matter of continuing to do better and to help more people. Having a growth strategy for a podcast is very difficult because there's not really good analytics and target numbers. I had yesterday a good friend of mine who's an industry podcast said, "Hey man, what kind of downloads are you doing monthly? What kind of, you doing, whatever." And we were kind of sharing some numbers. It's very, very difficult to do because a regular podcast in the normal consumer space, or, there's murder mystery podcasts, there's fiction podcasts, like we're a very niche type thing. So just looking at numbers from downloads and listens and things, that's a tough thing to strategize a growth for. So what I focus on is, how do I continue to add good, relevant guests on my podcast? How do I get better as an interviewer, not for my sake, but to bring better knowledge out of them to add value? And if I feel like if I'm continuing to get better, to make the quality, even from this microphone, I use the same $110, $120 microphone for 4 years in every Zoom, every podcast, every conversation I have. It crapped out. Okay, so I upgraded a little bit, and continuing audio quality and how do I cut that up into micro content so it can potentially reach more people. That's really the strategy we have. And we have some numbers and activity around that, but I don't think that there's a download goal or an episode goal. We didn't even put out an episode at all in the month of January. We did one December 31st, and then our 100th episode came out the first week of February. But we had as many listens and downloads as January. We had a little few more than we did in December when we put out 4 episodes. So it's just about putting out content and making it available to people to go find.
It's really interesting. And by the way, congratulations on your 100th episode.
Thanks, man. I appreciate that.
I listened. It was epic. Speaking about, metrics, marketing and entertainment, they're full of them. And with podcasting, it's different. There's 5-star reviews, there's subscriptions, there's how many downloads. some things are more important than others. For instance, time listened might be more valuable metric than, for instance, like a 3-second, video view. That being said, what are some key metrics, maybe 1, 2, or 3 that you're paying attention to in the landscape of 2021?
As far as in the podcasting realm?
Podcasting, it's just really more so marketing in general, specifically in podcasting, but really the whole social media, all social media platforms.
Well, I'll say this. Some of the stats that you were talking about, they're older numbers because we don't have the 2021s yet, but the 2019 numbers were the average video view across social media, not YouTube, but social media, was around 10 seconds. If you were one of the top 10 most watched videos on Facebook, specifically in 2019, it was 71 seconds. So 1 minute and 10 seconds. Now, the average video view on YouTube is a little over a minute, around 1.5 minutes. And so while video is the most engaged type of content, getting someone for 3 to 10 seconds on social media is really good, right? You getting them past 3 seconds is the first milestone. If they listen for 10, they're likely to listen for 1 minute. So in that world, those first few seconds is super important. Now, to flip that to the podcast side of it, the average podcast episode's around 40 minutes. And the Edison research says that 93% of people listen to most or all of a podcast episode that they start, and only 7% listen to just the beginning or less than half. The reason that's important is because most is defined in this study as more than half. And if the average episode's 40 minutes, then I have a 93% chance of getting them for at least 20 minutes. Okay. So I can be one of the best on the biggest social media platform on the planet and get them for 1 minute and 11 seconds, or I can be an average podcast and get them for 20 minutes. So when we talk about audio content, we all know people can consume longer because they do it in their car. They do it in, while they're in the gym, they have it on the background while they're working. Our brain can function while listening to audio and doing other things, but we can't do multiple things while watching and listening to a video. The reason I say that is because our social media strategy plays into that. We're in the audio space, but how do we create micro content to support that? I record my podcast just like you do through Zoom. So we're having audio and a video file. I may take a picture of this or a screenshot of you and I together, which we'll put on Instagram. I may take a quote and make a quote pic to put on Instagram, Facebook, wherever, transcribe it, make it a blog or website post. We take some of the audio clips and put subtitles and make it an audiogram. We repurpose the content to put in all the other platforms on social so that people that are used to just those 3 or 10-second clips or 60-second clips, we're providing content for them to give them a teaser and a reason to want to come listen for 20 to 40 minutes or whatever else. So our strategy is really about that from a metric standpoint. If we're growing on average in our downloads, we're doing well. If our social media profiles are adding followers, great. If we're getting more engagement from one type of post to the next, great. I don't know that we get super granular. Even right now, I mean, I've recorded, I haven't released them all, but I've recorded 107 episodes. We've been doing this 2.5 years. We've got, tens of thousands of followers across all the social media channels. And I would say we still just pump out consistent content over time because that's really the formula to win. And we'll pay attention to a few metrics so that if we were getting 50 likes on a post and now we're getting 10, okay, there's probably a reason behind it or something we need to do different. But at the end of the day, we just need to have it out there for people to find. And like I said, the rest will take care of itself because we're trying to add value. We're not trying to have a specific call to action. And I think in a podcast model, it's not that you can't monetize, you can, and you can make money at it, but that shouldn't be your initial goal or it's an uphill battle for sure.
100%. And you've actually mentioned this a lot. Look, the goal is to provide value, period, end of story. And if you're doing that, I think people are going to, be attracted to you. So I want to be super respectful of your time, Phil. And there's a few questions that we ask everybody. I've really enjoyed this. I'll have to have you back on, but there's a few questions that we ask. So I'm going to start with.
Sure.
Do you feel like you ever had a big break?
Yes.
Proceed.
Sorry, that was a yes or no question.
No, no. Ad lib. What was your big break?
Well, I feel like I've had a couple. If I can do a couple.
Please.
One of them was when I started my podcast. Through my boss at the time, I knew Barry Habib. He had come in to do a kind of a regional rally where we pull some realtors together again, because he had that existing relationship. So when I reached out to Barry to ask him to be my first guest, he said yes. Had I just been a random person, that probably wouldn't have happened. Now, I say that I completely cold called Tim Brahim to be on, like through his email website contact form, those contact forms that nobody really answers. And his assistant said, yes, he would be on. So I got some breaks there. But one of my biggest breaks in general was that Barry and those first 4 or 5 guests said yes, because nobody had any idea who I was or what I was doing. And everything that I've really built and done since then, I owe to those people saying yes and giving their time and value for me to share, because that's really where it created. And I think the other big break that I got was when I first became an area regional manager. I had built branches and I had been a good originator, but I didn't have really any experience in building a team across multiple states in the right way. And that company was just looking for good quality people who wanted to grow. And I was there about 6 years. And that was a big break for me, because it got me into some upper management echelons. And sometimes that's difficult to do, especially with quality companies. And so I think those are probably two of the really big breaks that I had along the way.
That's beautiful. Tim Brahim that's so funny, because I would peg him as like the hardest one to get out of all the people.
It was so funny. And I got to tell a little story around that. So I knew, because you have to understand, when I first got in the business, these were the headlining guys, right? It was Barry Habib, Tim Brahim, Todd Duncan, Sue Woodard, Jim McMahon, Greg Frost. Yeah, still are. Yes. So of course, Dave Savage, these are people that I went after. So Barry, I knew his assistant. So I reached out to her to see if I could get a call with Barry to ask him. I just looked up Tim, found the Performance Experts website, and through the contact form, literally I copied and pasted. Here's the thing. I name dropped the other people that I was inviting to make it look like I had more credibility. I said, I'm starting a podcast for the mortgage space. It's called Mortgage Marketing Experts. These are the first guests that we've invited, including you. And I listed the names. Like, we invited them. They hadn't said yes yet, but I'm name dropping people that I'm inviting, and so it was kind of a little hack there. But they did. They turned around and said yes. And I didn't know Tim, and I got the opportunity. He and Scott Bertone were my coach for a year. I coached with them. Just incredible people. And Tim was the first episode. Like, I knew Barry had gold in content, but I'd never talked to Tim one-on-one. So you've heard the episode. Barry just gives great gold, and I say fantastic, and then we move on. Tim was the second recording I did, so I tried to be more conversational. And I'll never forget, at the end of that, we were talking about work-life balance, and he was using this analogy of these Native Americans in the Midwest who, after they go on a hunt, they camp about 100 yards from the rest of the tribe overnight. And it was kind of this transition from warrior mode to family mode. And they're saying, hey, when you're in the hunt for work, and you're kind of the heat of the moment, heat of battle, you have to have some transition to your home life. Maybe that's the drive. And he's using this way up in the clouds, just stuff. And I said, well, I want to be very respectful of your time. One last question we ask this of all of our guests: if you could just give one tip to mortgage professionals today to build their business, what would it be? And he said, do more video. And he starts going off on video. And I remember grinning to myself. I'm like, he's way up here in the clouds. And then boom, we're right back down the tactics here. And I remember thinking to myself, I'm on to something here. Like, this is good stuff. And so Tim was an incredible episode. And then fortunately, I had an opportunity to do one with Barry and Tim together. And that's the first content they had created together in about 10 years. And so that's one of my highlights for sure.
That's super cool. I've listened to all 3 of those. All right. This is a juicy one, especially given the story I've already heard. Was there ever a time you felt like giving up?
Yes, absolutely. I need to share a little meme that I found about the roller coaster ride of a podcast. you're on a high, I have a podcast, and then the newness wears off. And then you're like, oh, okay, cool. I'm starting to see some results. And then those kind of, and there's this huge roller coaster ride of having a podcast. And I was probably 6 months or a year in. I was actually coaching with Scott Bertone and Tim Brahim at the time. And I was on the phone call with Scott, and I had a lot going on, because I'm still active as a mortgage professional, and I had a lot going on with my region. I had a lot going on personally, and I'm like, I'm supposed to get an episode out in 2 days, because I was doing them every Thursday or Friday. I can't remember. I've moved my release date out a lot, but I'd done one every single week, and I'm like, I got to get an episode out. And he said, well, hold on a second. What happens if you don't put out an episode? And I'm like, well, I mean, everything I've been working for is just, people are going to be expecting it. Like, this whole arbitrary standard that I had built in my mind. And he said, do you really think if you don't put out an episode or two, that everything you've done is just going to absolutely implode? And I'm like, well, when you put it like that, no. And he goes, okay, well, don't you think if they show up for a new episode and they don't have one, that they're probably just going to go listen to a previous episode? Because it's arrogant to think every one of your listeners has listened to every episode. And I'm like, okay, fair enough. And at that time, I was so overwhelmed. I'm like, I don't know what to do. Something has to give. Well, I don't make any money podcasting. I make money doing this over here, and I can't just get rid of my family. And that would have been the weakest link. But he gave me permission to give myself permission to take a breath. And I've used that several times. If people go look, and my partner in industry, Syndicate, Dustin Brome, is the pillar of consistency. For 3 years, he's put on an episode every single week for like 160 some odd weeks. Like, props to the dude. Like, I don't know how he's done it. In 2.5 years, I put out like 110 episodes, right? We've not done one every single week. And part of that is because I want people to understand that I say, if you're going to start a podcast, plan on putting out an episode every single week for 2 years, because you need to commit to it. This is not a short-term thing. You don't start a podcast, do it for 3 months, and then stop. But I also want to be real and relatable that you do not have to put out an episode every single week all the time. Give yourself permission to not do that, so that you can, so you don't sacrifice the long term. Had I quit, I'm like, well, I can't put an episode now, and it's these walls we build in our mind that are illusions, that aren't there. And so sometimes we have to give ourselves permission to say, okay, well, that's all right. This is my podcast. This is my show. This is how I want to do it. And like I said, I wanted to do my episode 100 a certain way. And it took several weeks for me to get in those people's calendars. For those that don't know, I did a compilation episode with 10 guests from some of our most listened to episodes. These are busy people. It was hard to get in everybody's calendar and get it put together.
I thought you're just going to take the best parts of the podcasts that you've already done with them. You called and re-interviewed all of them. I was expecting that when I got onto it. It was like, but I mean, that's awesome.
Well, and it was, I appreciate that, because it took some intentionality, and I'm like, we're not putting an episode out for a month because I can only do 100, right? I had other episodes recorded, but I can't put it in front of it. Right. And so, I do that to let people know, like, that's okay. And I will say too, in that episode, I was traveling for some of those interviews, and I had taken my Blue Yeti mic and my laptop, and the hotel, I was staying with family, the hotel that I planned on go to use the Wi-Fi, because I'm status with this chain. And normally you could just use your logins and get to Wi-Fi, but they wanted a room number. And so I didn't have any Wi-Fi. So I ended up having to record about half of those episodes with wired earbuds and my iPhone. And I just recorded it directly into Zoom and saved it in the cloud. And so again, guys, you don't have to overcomplicate it. If you're wanting to create audio content, plug your headphones into your phone, use voice notes, and then go put it on a host platform that'll syndicate for $10 a month, and you got a podcast.
Brother, that's fire advice. I mean, you got to do it, and you don't have to worry about it being so perfect. I mean, it'd be okay with, just putting out good, high quality, valuable content. That's beautiful. If you were to do it all over again, what would you change?
Ooh, that's a good question. Part of me wants to say nothing, because I'm a guy that typically doesn't have a lot of regrets, because even mistakes you made and bad things that happened led you to where you are. And that's what's most important. But if I were to advise someone in starting a podcast, I would have them do a few things differently. Stuff as simple as don't overcomplicate what it is you want to do, right? A podcast is very simple. It's audio that's put on a bunch of different platforms. People overthink intro music and overthink the conversations or the way you have to promote it on social. And there's a couple of things that I think I didn't do for a while that you've already done a good job of. When I first started, mine was, welcome to the podcast. The mortgage marketing expert is this person. Hey, before we get too far, tell people your background, how you got started, whatever. Well, I have expert guests and I wasn't even introing them. I wasn't even edifying them like you talked about. I wasn't giving them a platform to share fire advice. I'm essentially making them tell people why they should listen to what, I'm saying? I did that wrong. So
you had them edify themselves.
Absolutely. They were essentially giving their own bio to give themselves a platform. And it's just like, if no one knew you and or say, if someone over here doesn't know you and I say, oh my God, Jimi Ryan, he just spits fire. He's absolutely incredible. You've got to listen to this guy. And then as soon as they meet you, like, no, Phil's the man. Right. Phil, what happens is we've both created credibility with this person by the power of edification. But if I, introduce you, say, hey, this is my buddy, Jimmy. Hey, Jimmy, tell him how awesome you are.
Right.
Well, that doesn't work. Right. And so I didn't do that for a bunch of episodes in the beginning. And I learned that from my partner, Dustin. So that's part of this is to tie into that. Make sure if you're bringing on guests, you edify them. Don't overthink your intros, outros. Don't make this more complicated than it needs to be with the fancy equipment setup. Get a $100 mic, plug it in, use a free version of Zoom, and record. The other thing that I would do is collaborate with other podcasters. I've learned so much stuff from people in and out of the industry that are doing podcasters, and almost everything I've done has been taught to me or I've copied from someone else. There's very little in the podcasting functionality that I do on my own.
To follow up on that, who are some people that you watch? Who are some people that you do learn from that you respect in the podcasting realm?
Obviously, even in our space, mortgage and real estate, Lee Brown is a phenomenal podcaster. My partner, Dustin Brome, Chelsea Pites, these are good friends of mine now because I've continued to go to them over and over and over and want to develop relationships with them. On a national level, I look at Joe Rogan because Joe Rogan has made a hundreds of millions of dollars podcasting or now through this Spotify acquisition, really talking about nothing, right? Even the way he starts his podcasts. Hey, what's going on? They're just, everyone kind of knows who this person is because they're celebrities. He's like, man, I saw that you were drinking a chocolate milkshake last night. How was that? And we're already like, oh my gosh, like I want to listen to this episode.
This is fire. This is fire.
Yeah, this is incredible. This is incredible. And then the flip side of that is a Lewis Howes who has, 1,000, 1,200 episodes out there. And he's very strategic in how he interviews and how he unfolds and the segments of it. And so, I just consume a lot of podcast content. I think Jen Duplessis is another great podcaster in our space, Todd Duncan as well. There's so many. I think the answer to that is all of them. I listen to all of them and take little bits and pieces that I think make sense to me.
That's beautiful. All right, to set this next question up. So your upbringing was one where, like, look, you had an average uneventful life, but then, like, look, also, like, your parents got divorced when you're 16. You are in multi-level marketing. You own a business. You sell it. You're moving around to all these places. You've gotten divorced. You have all sorts of drama. But now you're here.
Mm-hmm.
What advice would you give to someone looking to get it done?
One of them is that I've already said it a couple of times, and I say it because it's truly the key to get it done. You just have to go do it. It's consistent and persistent effort over time. Now, to stay consistent and to have the attitude to stay persistent, that journey is between our ears. right? We can tactically go do the work, but that's why it's not just the consistency. The persistence is about being driven. And I think there's a difference between being driven and being motivated. Motivation comes and goes, right? I think Zig Ziglar has the quote, motivation is like bathing. It needs to be done daily. Being driven is something that you just can't shake, right? And so part of that conversation is as you go through really hard stuff. I've been through repossessions, foreclosures, utilities getting shut off, divorces, all of this stuff early on in my years. I've been through a lot of stuff: personal divorces, parents' divorces. I don't wear it with a badge of honor, but it's my truth. It's who I am. All of those have contributed to creating who I am. And I share that because every bad thing that we go through, in my opinion, happens for one of two reasons. It's to prepare us to handle something else that's coming down the road, or so that we can share our story to someone who's going through the same thing and be a bright spot in their life. So when you go through stuff during this, staying consistent because you have a burning desire that you want nothing more. I want to get this, like I want to get it done. To stay consistent, we have to keep a positive mental attitude. And to do that, whenever bad shit happens, I don't know if I can say that or not, when bad stuff happens.
Explicit. We got it. It's
yeah,
good.
got the E. when that goes down, you have to remember, this is part of my journey. I'm going to be on stage sharing this with thousands of people. And there's going to be someone in that audience is like, oh my gosh, like that changed my life, because if they can do it, so can I. And that's one of the reasons I don't want to be someone who's polished. I don't want to be someone who doesn't say all the time. I want to be relatable, because guys, if I can create a podcast that people listen to, anybody can. I'm absolutely nothing special. I've learned from folks. So I would say, get started, don't quit, stay consistent, keep your head right. It'll happen for you.
It's beautiful, brother. I love that. All right. Well, I want to thank everyone for joining us today. And I want to especially thank Phil for taking time out of his day to talk with us. And Phil, if anybody is looking to connect with you, what would be the best way you'd want them to get in touch to connect?
Right now, I'm focusing a lot on Instagram, just at Phil Treadwell. Shoot me a DM. I answer everybody's DMs, even if it's a no thank you. Even the solicits, I feel the need to respond. But I'm on any social media platform at Phil Treadwell. My podcast linktree is just mmepodcast.com. You can get a hold of me through there as well. Love to collaborate, love to help. I don't have a book to sell or a course to download or anything. I just like meeting people and helping people grow.
Yeah, and you have value to provide. So really want to thank you. All right, beautiful. This has been the Get It Done podcast. You can find us on Apple Podcasts, Spotify, anywhere that you listen to podcasts. And if you enjoyed this show, tell a friend. That'd be really cool. Have them write a 5-star review, hit that subscribe button. All those things really make a huge difference in helping us reach more people. Once again, I'm Jimi Ryan. Thanks so much for listening. Many more guests on the way.